Hello everyone, this is Dr. Supreet and I'm from Department of Commerce, Delhi School of Economics, University of Delhi. Continuing the series on to salaries, we'll today be talking about the provident funds. Now what are the provident funds? They are basically timely arrangements that are taken for the future thing. For example, like your public provident funds, your employees' provident funds. Now, provident funds, when we are talking about these provident funds, we categorize them into public provident fund, your statutory provident fund, recognized provident fund, and unrecognized provident funds. Starting up with your public provident funds. These, as the name mentioned, these are created for the benefit, for the welfare of the general public, so that boost for the investments and savings habits among the public is given. So be it any person, whether it is a government employee or any other public, he is free and he is open to go for a PPF account. Now, there is a limit for the same. It is subjected to a minimum of your 500 per annum and rupees 1,50,000 per annum. That means any person who wish to go for a PPF account, he is open that he can put up a minimum amount of rupees 500 to that PPF account, and that is subject to your maximum of rupees 1,50,000 rupees. Now, when we talk about these PPF accounts, the interest that is available onto these PPF accounts, it is basically tax free. That means whatever the interest that accrues onto these PPF accounts, these are tax free. And presently the interest rate for these PPF accounts, they float around your 7.1%. Now, what is the benefit of these PPF accounts? There are a number of benefits that we can, associate with the PPF accounts. So, when we talk about these PPF accounts, the first very thing is your employee contribution. So, in this case, any person, be it an employee of an organization, be it a public, right, the general public, they will get the deduction under the Section 80C. That means if they save their savings into the PPF account, then they will get the deduction under your Section 80C. That means whatever be your gross total income, that will be deduced by rupees, whatever you will be saving up. If you will be saving rupees, let's say 1,20,000, then your amount of deduction will be 1,20,000, but it can be subject to a maximum ceiling of rupees 1,50,000. Now, another important point with respect to your PPF accounts are that they are repayable after 15 years. That means they get matured after 15 years. In between, there are number of options with respect to the same. That means you can withdraw the amount in case, but that amount can be partially withdrawn, and that too after serving a period of minimum 4 to 5 years, and that too depends on to other terms and conditions. Further on, if you are, in this case, PPF account, as it is open to your general public also, it is open to the employees of any organization, there is no restriction, it is not mandated. So, thereby, there is no employer contribution in such PPF accounts. Similarly, as I mentioned earlier, the interest that accrues onto these PPF accounts, it is entirely exempted. That means whatever savings that you make into these PPF accounts, that would accrue an interest rate of 7.1%, and plus that too, that interest is not taxable under your head's income from other sources. Further on, another benefit that we get while putting up our savings into these PPF accounts is that whatever be the amount of maturity after that account that gets matured, let's say in this case 15 years. So, whatever be the amount of maturity, that will be totally exempted in the hands of assessee. That means he is not liable to pay the taxes on such amount. Further on, there is a categorization, that is your employees' provident funds. So, under your employees' provident funds, we basically are having the statutory provident fund, recognized provident funds, and your unrecognized provident funds. Now, starting up with the statutory provident fund. So, these statutory provident funds, they were set up under the provisions of your Provident Funds Act 1925. That means these are such sort of your funds which are to be maintained by the government your semi-governments, local authorities, universities, educational institutes, railways and many more. So, under such SPF accounts, usually your employee contribution, it is again you get a benefit, you get a deduction under your section 80C. So, for whatever being your employee's contribution, for these you could say SPF accounts, that is fully deductible under section 80C. So, 80C says up to rupees 1,50,000 that you make into this SPF accounts, that will be and you will get a deduction for the same. Similarly, the employer contributions for these SPF accounts is entirely exempted. That means whatever the contribution, the matching contributions from the employers in, that will be exempted in the hands of your taxpayers, right? That will not be taxable. Further on, the interest that we get onto these SPF accounts. So, now that interest amount that accrues onto these your SPF accounts, that is entirely exempted. But now there has been certain limitations that have been passed by the under new, or you could say changes or the amendments that have been taken over. That means now onwards there will be no exemption that will be available for the interest income during any relevant previous year with respect to your SPF. That means अगर वो आपका 2,50,000 से ज़्यादा your interest income is more than that, your contribution is more than that, so the interest income onto the same will be taxable. Earlier there was no such limits, but now there are certain limits onto the same, which says that in case your contribution exceeds 2,50,000 rupees, now the interest that accrues onto this excess portion of your interest, this contribution amount, onto that your interest amount will be taxable. Further on, when we talk about your maturity amount in case of your SPF accounts, that is your statutory provident fund accounts, in those cases your maturity amount, that means the lump sum amount that you get at the time of maturity of the fund, so that entire amount gets exempted. That means you are not supposed to pay off any taxes onto the same. Now, further on, when we talk about these accounts, the second or let's say the third category in overall and otherwise EPF may if we talk about, then we have this recognized provident funds. So, this recognized provident fund, it is as per your EPF Act 1952, and here the employers are supposed to maintain such RPF accounts in case the number of employees are more than 20 in an organization or in an institution. Now, when we talk about these recognized provident fund accounts, as the name mentioned, the fund accounts are the recognized one. So, in this case the employee contribution, जितना भी employee ने contribute करा है in funds में, for that you will be getting the entire deduction under your section 80C as it was available in your case of SPF, as it was available in case of your PPF. So, similarly here also you will be getting the deductions under the section 80C. Further on, employer contribution. Now, when we are talking about employer contribution, then in that scenario it is exempted up to 12% of your salary. That means कि जितना भी employer ने contribute करा है वो आपका exempted होगा, but हमने upper ceiling mention out कर दी है. That upper ceiling is what? It is your 12% of salary. Now, when we say salary over here, the salary term means the connotation stands for your basic salary, the DA that is forming part for all the retirement benefits, plus the commission that is given on percentage basis. So, when you combine all these three segments, then you will be coming to that definition of your salary for the purpose of your RPF. So, it says when we are talking about your employer contribution, it will be exempted, but it will be exempted to the upper limit of your 12% of salary. Now, when we say the interest credited, again you will get the exemption for the interest that has been credited onto such amount, onto such contributions that have been made by the employee and the employer under your these RPF acts, but again that amount of your interest is exempted only up to 9.5% of your salary. That means again Here the salary means basic salary, your DA that is forming part of the salary, plus your commission which is on to percentage basis. Now, so that gives you your entire salary. So salary is 9.5%. That means whatever be the amount of your salary, you are being given an exemption up to only 9.5% of your salary is exempted when we talk about the interest accrued onto the same. Similarly, when we talk about the lump sum amount that we get onto the maturity, right? So that lump sum account is your, again when we are talking about them, that lump sum amount is your entirely exempted. Now, when we talk about these RPF accounts or when we talk about these SPF accounts, so the contribution again as I mentioned, now the first April 2020-21 onwards, it has been mentioned that the contribution that has been made by the employees over rupees 2,50,000 rupees in a previous year. So in such cases, if your contribution is more than 2,50,000, then in such cases your amount of interest that is accruing onto the same, that will be taxable. But let us suppose when we talk about these SPF accounts or whether we talk about your RPF accounts, in case the employer does not make any contribution, then in that case your limit gets extended to 5 lakh rupees, right? So in short, that implies if there is a contribution by the employer, right, in that case your maximum limit is 2,50,000. That means any amount that you put into these funds, and if it exceeds 2,50,000 rupees, so the interest onto such amounts will be taxable, but it will be taxable your 1st April 2020-21 onwards. And in case there is no contribution by the employer, in that case the employee is eligible that he can get a enhanced threshold. So that threshold is enhanced to rupees 5 lakh rupees, right? So another point that is to be kept into mind when we are talking about these RPF accounts, here we mentioned the employer contribution that it is exempted up to 12% of salary. But again there is a updation onto the same, that employer's contribution when it exceeds your 7,50,000 rupees per annum, then it will be taxable. Now, what does it mean? It means that for your employer contribution, you are having an upper ceiling of 12% of salary, but again onto that upper ceiling there is enhanced limit. That means आपका जो 12% of salary का amount आएगा employer का, वो आपका 7.5 लाख रुपए से ज़्यादा नहीं होना चाहिए. अगर वो 7.5 लाख रुपए से ज़्यादा employer का contribution है, तो जितना part excess में होगा, that will be your taxable. So that is an important update with respect to these RPF accounts. Now further on, there is another segment that is your unrecognized provident funds. As the name suggests, these are not the recognized provident funds. So in these scenarios, whatever be your contribution by the employees, you are not eligible to claim the deduction under section 80C for such employees contribution towards these URPF accounts. So whatever contribution your employees make towards these your URPF accounts, you will not get any benefit or you will not get any deduction for the same. Similarly, if we are talking about your employer contribution, so in those scenarios, if the employer contributes, then it will be exempted, because usually in such unrecognized provident fund accounts, the employer does not contribute usually. So this is what is the normal scenario. But in case your employer is contributing towards the unrecognized provident funds, then of course it is entirely exempted. Further on, the amount of interest that you get onto such unrecognized provident fund accounts, those amount of your interest will be entirely exempted, right? Now there is an important thing with respect to these URPF account, and that too with respect to your maturity amount. So maturity amount, as I mentioned, this is a lump sum amount that you get once your provident funds gets matured. So in this scenario, when we talk about this maturity amount, there are certain provisions with respect to the same. Supposingly your maturity amount is 7 lakh rupees, right? So in such scenario, we are assuming the principal amount being your 5 lakh rupees and the amount of your interest being 2 lakh rupees. Now further on, let us suppose both the employer and employee have equally contributed towards your this URPF fund, right. So when they have equally contributed, that means in case of your principal, 2,50,000 is contributed by the employer and 2,50,000 is contributed by your employee. Similarly, for the interest factor, your 1 lakh rupees is contributed by the employee and 1 lakh by the employer. That means जितना भी contribution आपके employer and employee ने करा है, here we are assuming them to be equal. Now, when we talk about the taxability of your employers or employee contribution, so when talking about the same, whatever be the amount of the contribution that your employer makes, whether with respect to your principal or whether with respect to your interest amount, so both of them becomes taxable. So that is to be highlighted again, that whatever being your employer's contribution of the principal amount or the interest amount, so both sort of your contribution by the employer becomes taxable under your URPF accounts. Similarly, when we talk about your employee contribution, so your employee contribution of principal, it is entirely exempted. That means जितना employee का contribution होगा main principal amount में, URPF funds में, then that will be entirely exempted. And when we talk about your interest amount, those interest amounts are taxable under your head other sources, not into your salaries but other sources. That is the fifth pillar of your income tax. So in case of your URPF account, whatever maturity amount that you get, your employer contribution, be it your amount of your principal, be it the amount of your interest, it is entirely taxable. And when we talk about your employee's contribution, in case of your employee contribution, your amount of principal is exempted, but your amount of your, let's say, the interest, it is not exempted, rather it is taxable under the head your income from other sources. Now this was all about that third segment when we talked about your salaries format, wherein we have already discussed about your allowances, we have discussed about your retirement benefits, and now we have taken up your this contribution towards the PF account. Now the another important segment that comes into the picture, or the another important component that forms a part of your salary, is your perquisites. Now perquisites are basically the benefits. These are the casual benefits, or you can call the emoluments that has been attached to a position. That means you are into such job role or such, you could say, positions where your employer is providing you certain benefits, certain amenities with respect to your position. Now these benefits or these perquisites can be in cash or it can be into kind, right? Because as I mentioned, allowances has to be into the cash, right? And they form a main part of your salary. But when we talk about the perquisites, they are actually the benefit that your employee, he receives over and above his salary. So allowances, basically both of them, they form a part of your salary, but perquisites are sometimes they have exclusively taken up as your benefits, as the extra benefits that an employee receives over and above his main basic salary, whatever he is drawing from the employer. Now point comes, whether these perquisites are taxable or not taxable. So it depends on to what sort of perquisites you are drawing from your employer. Now these amenities that are being made available to your employees by the company, they are actually subject to taxation in certain scenarios, and there are certain rules and conditions attached to the same. So one by one we'll be taking up different perquisites. The number one being your servant facility. So these servant facilities are basically your services that you engage, any services of your servant that you engage, and when it has been engaged by your employer, that means your employer is providing you that with that servant facility. So it will be entirely taxable if the employee is specified. Now this is a very crucial point when we say employee is specified. Now what is a specified employee? Specified employees have been defined as in those employees who, let's say, holds a position of a director in a company, so they'll be termed or they'll be referred to as your specified employees. Similarly, your employees who are holding the substantial interest in the employer company, that means they are having the voting power of more than 20%, so then also we'll be considering them as the specified employees, right. The third very segment comes your any other employee who is drawing more than 50,000 per annum. So this is one important point that actually makes every sort of your employee as a specified employee. So you would see every person will be drawing at least 50,000 per annum, because we are not talking about per month, we are talking about per annum. So herein every employee will be considered as a specified employee. So in this case, any servant facility that has been engaged by employer, it will be taxable as it happened in this particular case if the employee is specified, and similarly if the employee himself is engaging such services and the employer later on reimburses the same, then also it will be fully taxable. We will be continuing the series into the further segments. So this is the first type of your perquisite. Thank you.